So welcome, good morning. We are very pleased to have you here. We really cherish the collaborations with our free zones. And who we are an international tax consultancy, which has been established in Munich, Germany over 20 years ago. And in the UAE, we started with our license with Rages in 2016 officially. What we do, it's like to fully cover the cross-border issue. We start with the tax issues in Germany, Switzerland, Austria, DACH countries, then jump over to the UAE doing this cross-border tax. Here we can establish the company. That's why we partner with Free Zones. So as channel partners, we open the companies for our clients. And then those clients become also our clients for the local tax issues. And what we will talk about today, this is very relevant, of course, because nowadays a lot of companies leaving Europe and other countries and coming to the UAE. So to explain to them also what the differences are between free zones, mainland, free zone, designated zone, what will be the consequences of those choices for your taxation in the end, this is critical. Yeah? And we will also discuss about the qualifying free zone person, what it takes to become qualified, qualifying activities, also important topic, and the qualifying income, and what is non-qualifying, and what is the Minimis rule, which applies in certain circumstances. So there is those main two types of free zones, normal free zone or designated free zone, which in the end will translate into different tax rules. So a free zone per se itself is just standard free zone, economic zone, or free trade zone, as you call it. We have, I think, around 47 free zones in the UAE at the moment. Only some of them are designated, which means they are usually located more strategically next to the airports, like the Dubai Airport Free Zone or Dubai Commerce City. And free zones in general are considered like a separate body within the UAE from the mainland. So it's like a self-regulated entity. And of course, every free zone also has their own regulations. So we will never find the same activities, the same license types, and the same rules for several free zones, unless maybe there's one owner and certain things are common. But in general, it's like playing a puzzle with every free zone. You have to know the rules of every free zone itself. Yeah? For the designated zone, it's a little bit more advanced, and they usually focus more on typically on manufacturing or on certain very typical activities. Whereas the normal free zone, as you even mentioned, you are specialized in virtual assets. There are free zones specialized in media, free zones specialized in commerce and other activities. So in the end, most of the licenses probably are given to the general business activities, but then there is a certain percentage of specialized licenses, which those free zones call themselves being specialized based on that. Yeah, and as I mentioned before, free zone is kind of an own entity, separated from the mainland, and in general, up until now, it was not permitted for the free zone company to deal with the mainland, right? At the moment, we know those rules are relaxing as the UAE is trying to support the businesses, and they already announced those licenses and activities that will be allowed. So thank you very much for this short attention, and please take over for the real topic now.
Good morning. Thank you, Anna, for a brief introduction of free zone and designated free zone difference. Regarding the difference in taxation point of view, there is all designated free zone only give you an option only when you are doing a trading activity. Then there is a difference in designated free zone and normal free zones. Otherwise, there is not too much difference with the free zone and designated free zone. For example, if you are in a designated free zone, there is a VAT exemption rules for you guys if you are doing in a trading. But if you are doing in a services, it's not a big, major difference between designated zone and free zones. Of course, free zone provide corporate tax income free and also some export duty free when you are doing trading activity. So our main topic is today for the corporate tax. What is the benefit of the free zone persons to get a 0% corporate tax rate? So qualified free zone person two type of there is a misconception in the market. When you are set up a company, you are a free zone person. It does not mean you are a qualified free zone person. For getting corporate tax benefit advantage of 0% rate, you have to be a qualified free zone person, not a normal free zone person. What is a free zone person? Any person who get the trade license from the free zone, he is a free zone person. Free zone person, a juridical persons incorporated, established, registered in a free zone, including a branch of non-resident persons or UAE juridical persons that is registered in a free zone. So it means that if I go to the free zone, I got a trade license from the free zone, so I am a free zone person. It does not mean I am a qualified free zone person. For getting the benefit of the corporate tax, you have to be a qualified free zone person. So what you have to meet the qualified free zone person, you have to meet these conditions. The first condition is you have to be maintain adequate substance. Adequate substance means you have to be employee in the company and you are providing SIGA. SIGA means core income generating activity from the free zones. You have staff, you have office, you have asset in the office, you have doing some expenses in the free zone, and you are earning the main. For example, if in your clients you have the client are doing exchange trading of shares, so they have the office in the office your free zone, they have staff, so they have to be perform these activity from the free zones. So then they are in a qualified free zone person. Second thing is you have to be earn qualified income. This qualified income I will explain later what is the qualified income. So it's little long topic, so I cannot explain over here. I will go in next slide, so I will explain what is the qualified income. So if you are a qualified free zone person, you have to be maintain transfer pricing rules. So transfer is too much revenue for the master file, but for the local file is some like you have to be maintain master file and local file. For master file you have to be revenue of 3.15 billions, and for the local if as a group you have a 3.15 billion revenue, then you have to be maintain master file and local file as well. And for master and local file, your individual revenue is also more than 200 million. So then you have to maintain the TP documentation. And if you want to get a benefit of corporate tax 0%, you cannot elect normal tax regime. When you are submitting your corporate tax return, there is an election. That in election they ask you specifically, you are going to elect as normal tax regime. You have to be say no. Then they give you option for qualified free zone person can get advantage of 0% corporate tax rate. Additional requirement for qualified free zone persons, this having non-qualifying revenue not exceeding lower of 5% of total revenue or 5 million. This point I will explain in the next slides. First I will explain the qualified income, then I will explain the non-qualified income. Then I will this is a de minimis rule. I will explain in the later on slide that you have to be not exceed this revenue. And there is also a new rule from 2023. Qualified free zone person must prepare the audited financial statement. I don't know, before in Rakis there is a requirement to submit the audited financial statement. Right now there is no proper such requirements. But for the corporate tax point of view, you have to be maintain audited financial statement from the local auditor, not from the international auditor. From the local auditor who is registered in the Middle East, you have to maintain audited financial statement from there. So if you cannot meet the condition of these upper condition I told you, you have adequate substance, you have earning qualified income, and you have TP rules if you are revenue such higher amount, and you have audited financial statement, and your total revenue is less than 5% of the non-qualifying revenue, so then you have to get 0% corporate tax advantage. If you cannot meet these conditions, so you cannot be a qualified free zone person from the, if for example I am right now in 2025, I cannot meet the condition in 2025, so I cannot be a qualified free zone person for 2025 and the next 4 years. means 26, 27, 28 and 29. For the next 4 years, I cannot be a qualified free zone person. So if you want to be a qualified free zone person, you have to be maintain these standard from every year. So if you cannot meet in 1 year, from next 4 years, you are not be a qualified free zone person. If I lose the condition of qualified free zone person, I close my previous company, I will open a new company. Previous company chapter is closed. If you open a new company, you can get a new TRN number. Then previous company is closed. New company will be considered. So for that one, you have to be meet every year. This is the main topic of qualified income for qualified free zone persons. What is qualified income? Any income derived from a free zone person to other free zone person. For example, I am a free zone person. I am doing any activity with another free zone person. This income is qualified income, but that income cannot be from the excluded activity. There is a list of excluded activity. You cannot do that activity with other free zone. If you are doing any other activity with the free zone to free zone, this is qualified income, but cannot do with the excluded activity list. There is a list of excluded activity. I will show you in the later on. But free zone, you have to be free zone person doing activity with the other free zone. This is qualified income, but not excluded activity. So these 5 excluded activity you have in mind. Then I am not doing this activity. Then my income is qualified income. The second qualified income is I do transaction with other free zone for non-free zone as well. For example, I am in a free zone. I am doing activity with the mainland, any other country, but with qualifying activities. I have a qualifying activity. I am doing a transaction with the other mainland company as well, but should be in a qualifying activity list. These qualifying activity list in the next slides. There is a number of activities that you are doing. So if you are doing these activity and you are doing with other free zone not with the free zone transaction, then this will generate you a qualified income as well. This is a little tricky. First point is I will explain later. First point is you are doing transaction free zone to free zone. This will qualify income, but only condition is over here, not from the excluded activity list. The second point I say that you can do transaction with non-free zone person as well, but you are doing with the qualified activity. So I hope this will be clear. This is little confusion, normally confusion for the people. So when we are seeing the ad from the free zone, every free zone making the ad that if you make a setup of company in a free zone, you are free from the tax. It's not like that. If you want to be a 0% corporate tax, you have to meet these previous conditions. You have to be a qualified free zone person, then you have to be drive a qualified income. So qualified income, third is any income, other income which is under the de minimis rules. De minimis rule, for example, I am doing activity with the free zone person, with free zone to free zone. My revenue is 100,000 dirham. I have I do some transaction with the other free zone person, other free zone, with other persons. My revenue is 3,000 dirham from there. My total revenue is 100,000 dirham. From free zone to free zone is 97,000 dirham, 3,000 from the other persons. Authorities say these 3% of the revenue, we ignore this one. Your 100% revenue is a qualified income. 100% income is qualified income. We cannot take the benefit. We cannot take tax from that 3% income. If your income is 3%, your income is 4%, your income is 5%. It's okay. If you are crossing 5%, then they said no. Your income is more than 5% from other non-free zone person, you have to pay the corporate tax from the normal taxation rule. Importance of qualifying activity. Engaging in qualifying activity grant free zone businesses tax exemption, boosting growth and attraction investment. Knowing which activity qualifying is a key of compliance and maximization benefits. I will explain in next point for qualifying activities. These are the list of qualifying activities. If you are doing manufacturing or processing of goods in a free zone, if you are doing trading of qualifying commodities, logistic services, ownership, management and operation of ships, holding of share as a security of investments, fund management services, financial and leasing of aircraft, reinsurance services, headquarter services to related parties, treasury and financial services to related party, wealth and investment management services, distribution from a designated free zone to customer for reseller. And there is a difference of distribution. They're all activity. If you are doing this activity from a free zone, normal free zone, is okay. Only a distribution activity list need to be from a designated free zone. This is on if you have a client, he has activity is a distribution activity, then he need to be considered from, he need to be trade license from designated free zone. Otherwise, there is no much major difference. Normally in the market, designated free zone is more cheaper than a normal free zones. So they are selling that if you set up a company over here, there is no tax over here. It's not like this. For if you are doing these upper activities, is not major difference of free zone and a designated free zone. But if you have a distribution activity, then you have to be in a designated free zones. The excluded activity list. There is a list of excluded activity. If you are transaction with the natural persons, for example, I am in a free zone, I cannot sell an activity to a natural persons. I need to be a sell in a free zone to free zone person, or if I sell to natural person, this income will be a excluded activity list, and this can be a non-qualified income. This cannot be a qualified income. Banking activities, insurance activities, financing and leasing activities with exemptions, ownership and explanation of immovable property other than commercial property located in free zone, any activity that is ancillary to the above. Any activity that is above, this is the excluded activity list. This is a non-qualifying and non-qualifying income. Any income that is derived from excluded activity, this will generate you a non-qualifying income. So, and non-qualifying income which is other than free zone persons, not a free zone person, then you have to do with the mainland company. Transaction with the free zone person who is not a beneficiary. Normally this is a misconception that if I am doing one services and my colleague Maria she's asking me to give me a services, but she is not the beneficiary owner of that services. She is selling these services to another client that is in the mainland. So authority say we have to see the end beneficiary owner of the, who is the end beneficiary of these services. If end beneficiary is not the Maria, then this is not a qualifying activity. I know some people is doing, they are setting up two companies and they are doing transaction within the company, but that company is selling services to the mainland companies. They said we are doing the transaction within the free zone, so we are qualifying we are earning qualifying income. It's not like this. He said you have to be end beneficiary owner of the person is in the free zone. So this de minimis rules is I already explained. You have to be less than 5% or 5 million. Which one is available? You have to be lower than both of this. If you lower than this, then this is good to go. You have to get benefit of this qualifying income as well. Excluded item from calculation of total revenue and non-qualifying income for de minimis requirement. Revenue attribute to immovable property commercial located in a free zone from transaction with a non-free zone person. This we explained in last our tax breakfast very thoroughly, but I will explain again that if I have an immovable property, I am a free zone person, I have an immovable property in the free zone, and if I let to another free zone person, this give me a qualifying income. If I am a free zone person, I have a property is in a free zone, I am doing this, giving this to another free zone person, this give me a qualifying income. If I am giving to another, not giving to other person, not from the free zone person, then this will give you a non-qualifying income. And revenue attribute to immovable property commercial located in a free zone from transaction with any natural person. That if I have a property, I will let to a natural person. This will also give me a non-qualified income. Only a reason is only give me a qualified income only when I am free zone person. I have a property is in a free zone and I let to a property to another free zone person, not to natural person, not to non-free zone persons. Revenue derived from any domestic and foreign permanent establishment, yes, this will give you a non-qualified income, but there is an election. If you made the election of you don't want to pay tax on foreign permanent establishment, just made the election, then there is no need to worry over here. There is election when you are going to submit your first city return. There is a lot of elections. This election will be irrevocable. You cannot change that election later on, but this election is also one of the election you have to be take. But this election you can change every year. This year I don't want to be pay the foreign income tax, foreign branch tax. I said I will not pay. Next year I will pay. I want to pay. I said I will pay. But there is not too much difference if you are paying more than 9% tax in any other country. So they will not give you a credit, but they will. You can take that tax which you paid from there. You can deduct over the liability of tax over here as well. Revenue derived from exclusion of intellectual property unless considered qualifying activities. This will give any intellectual property which you have over here. This will give you a non-qualified income. When a qualified free zone person generates non-qualified income exceeding de minimis limit, that I explained that if you have a qualified income, you have non-qualified income. Non-qualified income is exceed the limit of de minimis, so you are lose the status of qualified free zone person from this year and in the next subsequent 4 years. So you are not more qualified free zone person. So you have to be pay corporate tax 9% from here, from this year as well. For example, if I cannot meet the condition in 2025, so I have to be paid 9% corporate tax in 2025 city and next 4 year as well. This is the present. This is little longer, but thank you for your time and patience.